All right, so I'm gonna address another question that I get pretty often. Profit taking. How do you know when to take profit and what you should be looking for after you enter a trade, right? Um, so right here, let's see. Let's do some of this. So right here, we're gonna locate the Fab Four. This one's probably gonna be a little. It's not too bad. Okay, we got the Fab Four here. We open above, solid red candle, but our bias is still green, right? Until we get a breakdown below this Fab Four, our bias is still green, right? So we tried to break down here, we couldn't, right? Support came in here, bounced up again. That's a double bottom, right? So it shows buyers are here just based on this can't continue, follows to the downside, right? So that's confirming my bias a little bit. So right here, once I see this, I enter this long to the upside, place the stop right underneath here. What I'm aiming for is the high of the day. That's the first take profit I'm aiming for, right? And if you notice, in this first take profit is three candles, right? So this is my entry candle here. This is green candle. I have one, two, three. This is my third candle. I like a 2 to 3 candle push, and then you take some profit, right? That I like that no matter what. This one just happened to be hitting the highs as well, but this is an example of what I would look for, right? And then once we get this, we move this stop here, right, to the 20. So when price breaks the 20, that's when I'm out, which would have been here, right? So move my stop up from here to there. Took some profit. Um, and if you wanted to wait on the candle to close to be out, then you may have rode this to the next high. But this is just an example of how you can manage the trade. Um, 2 to 3 candle pushes up plus a high, right? You could go to a longer time frame than this. Prior day, maybe there's a resistance up here, right? That you had marked and you had this one. So you're automatically waiting for this one and this one, right? But that's going to be levels. But I'm just talking about the 2 to 3 candle pushes in the high a day is naturally what you aim for, or the last high made is naturally what you aim for. Um, oh, let's see. I think I have another example. Um, yeah, so like right here. There we go. On Robinhood, um, you can see here we have the color change 20 pointing down. We've got a nice color change here. Boom. But there's no low, right? Like you can't, the low is here. It's pretty much entry. So where would you know to take profit once you get in here, right? Naturally, we go 2 to 3 candle pushes. One, two, three. So down here, I'm taking a little bit just because this is the third candle after the entry, right? Now also what we're going to do is see if we can zoom out a little bit and see what's over here, right? And see what's over here. So look, this is a nice little low here. When price came here before, it bounced up, right? So let's see. Let's place this right there. Oh, right there. Boom. It tapped here, bounced, came down, almost tapped and bounced. So let's go back to our trade, right? And let's see where this is. Ooh, look where that level is. It's right on top of some consolidation. So that's letting you know the level was strong prior, but right, okay. So we enter here. Boom. We've already taken some here. This is our second TP level. So boom, once this candle blasts through this level here, like that, we're taking some more down here. Because this is a level we know gets some sort of reaction, right? As we can see consolidation. Now we got a continuation to the downside. which is great because our stop loss would be the 20. Once we take some profit here and we take some profit here, our stop loss is no longer here. It's down here, wherever this was. So this was here. This consolidation, whenever this candle was here, it was here. So it was almost where price was, almost like a trailing stop loss, right? And it never broke. So there would be no reason to get out of this trade. You take a contract here, you take a contract here. If you're in 2, 4, however many contract your position size is up to you. But and then right here, once you get this is just further confirmation to the downside. So you just stay in and could do exactly what we just did. You know, you could just look over and see if you could find different levels or whatever the case may be. That's how you would normally manage the position and take profit. That's what I would be doing, going back, looking at these levels here once you're in, and then also sticking to the three candle bar move. This is ideal. You don't want to be in a trade like this. Like let's say right here, this red on the level of consolidation, this red took out this green, and if you were to enter right here, boom, this is just something you're gonna have to hold out or decide if you want to stop out once it kind of nicks that your stop loss there, or you could just use the 20 really, and if you were to get in here, just use the 20 as your stop loss, because I mean, you know, whatever. And then this is just kind of something you've got to hold out. It's not really the 2-bar, 3-bar move here. This is the 2-3 bar move here is when you're getting a solid. You're getting a solid move, solid entry. This right here, once you broke down, you wicked up a little bit, and you're not really getting that movement. The next bar isn't just a violent, solid, you know? So once you see, okay, the next bar, it may take a second for your move to start, you know what I mean? But don't panic. And also make sure you're not doing this for a very long period of time, right? 10 minutes, maybe, okay. You gotta wait it out, let price breathe a minute, I get it. But once you start getting into just, you know, just your theta's gonna eat you alive, depending on if your options or not. But so you want to try to catch the fluid moves, you know. But this is just a couple examples of taking some profit at the 3 bars, and then the levels as well. Right, and as you can see here, once you broke above the 20, this is where you would get out if you were to fully enter and try to execute, get everything you can from this trade. That would be it right there. But yeah, just don't want this video to be too long. I just kind of wanted to show you a couple examples of how I would take some profit if I was in the trades, using the 2 to 3 bar push, and also going back and marking a level or two to see where price likes to react, like this consolidation here, right? And then make sure I note that, so I can be like, okay, I'll take a lot of my profit there because this move is nice right here, and we could possibly get a reaction. I don't even want to be involved in it, so let me just take my profit down here, and I'm done with it. Now that's totally fine. Now you kind of missed the second leg, but you can't be mad at green. You know what I mean? Like it's going to be very difficult if you're upset with yourself for taking profit. You're going to be very emotional. It's going to be hard for you to trade. Very, very hard for you to trade. So you're going to have to just eat that. Say, okay, cool, I made 10%, 12%, whatever it is, $20, 200, 2,000, doesn't matter. You take that and you roll. Tomorrow's a new day because we're profitable. We're not traders. We're profitable traders. Okay? When you get that, when you smack that trade like that it goes to your plan, and you hit your level and you take that profit and all that, that's it. Walk away. I don't care if it's $10 because your account's 100. You know what I mean? Like But really, you should be paper trading. If that's the case, you shouldn't be gambling with your money if you're that new. To be honest, you need to be paper trading. But I know it's hard to do. I'm just saying. That's how disciplined you have to be with profit taking and looking at your winners and losers. You know what I mean? But all right, guys. I'll keep it relatively short. Thank you.